What is going on, everybody? And in this video, we're providing a state of the market and stock picks for October 5th, 2022. So that sounds like something you're interested in. Consider subscribing, as I do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So, state of the market, where are we at? We have our second day of rallying. Now, if you can't tell already, we are right directly into support. There's a couple things going on here. And yesterday, it started out with understanding that the current market is getting the sense that the world is essentially asking the US to back down on increasing rates. And so the probabilities of a higher rate raise have come way down from what they were. But understand that the Fed doesn't listen to the world. The Fed is trying to battle inflation. And next week is going to be even more pivotal because of that, with the core and with the earnings that are happening. Now, with that being said, the market's going to find a window to run, and it is starting to do that. Again, I wouldn't actually be surprised if we did break this and try to run back up to potentially at least potentially this level, the 3,900. That would not surprise me if we got some sort of earnings rally. Now, we do have non-farms. It's something I talked about, but non-farms, in my opinion, aren't really going to have that much weight. I think they can help the market if it is any kind of positive sentiment. Again, the thing that's happening is there's a lot of negative news, essentially pointing that the Fed needs to loosen its grip on rates because of the fact that the market can't take it, but they've made it very well clear that they are going to go after it no matter what, and that we haven't felt the pain yet. Again, I know this is something I keep reiterating, but you have to understand those words that he said matter. All these other people, all these other news outlets, all these other things that are going on, they don't matter. What matters is what he has brought to the forefront and the way he's coming across on every single one of these last essential viewings or monetary policies speeches that he's done. He's said the same exact thing, and he hasn't changed. If the things don't get better, he's going to continue to hammer rates. They're essentially, core inflation needs to stabilize and come down significantly before they think about pausing for a minute. Now, we haven't pulled back that much. We had 9.1, we came back down to 8.5, now 8.3. Again, the next core next week is going to be extremely important. I think that the Fed needs to see another pull down, potentially into the sevens, before they think about just not doing anything and going neutral to see how the market takes that. The market or the Fed will essentially do it that way before they start just dialing back on rate raises, because they need to see that if they go neutral, how the market's going to affect that. And they're not going to do it where they have a month in between. That's why they hit 375 point basis moves coming into this month gap, and then see how our next core will be. And our next core is very critical, not what's going to happen on Friday, but it is very critical on how the Fed are going to go into the next monetary policy. But not only that, you're going to see that essentially the aftermath of what's been going on during earnings. Now, we just had that last 75 point basis move towards the back half of Q3, so you're not going to see that last one as much. Q4, you're going to see the impact of all those 75 point basis moves, plus whatever the next monetary policy is. You got two more before this quarter's over. And so you'll really see how much of impact it's going to have. Again, I don't think the Fed are going to dial back on this next one. I think potentially they could pause at the last one, but it really just depends on how things go. And this is why it's been so critical. And since then, we've got this idea that we had before, that everything is reversing and that we are good. To understand that these things, they take a long time to play out. They aren't quick overnight. The market is running off a hopium that the Fed will listen to the world and them saying that our Fed needs to dial back. Things are starting to pull way back. The dollar, um, oil is still kind of fluctuating around the 86, 88 mark. But the dollar, again, pulled back quite a bit, but it's expected. It can't just go straight up. To build momentum, it needs to pull back, and then it can. We have to see if it continues on. We don't quite know that yet. So, what matters is how we finish out the week and how next week is going to play. So, if potentially this week, if we don't get rejected hard, because typically after first retest of a major support, you're going to get a very hard rejection. I expect some sort of rejection tomorrow. Now the question is if, or maybe we even gap up. I mean, this market is is full of surprises. Majority of the time, you get a hard rejection off this, and then you'll get that leg that could potentially break it after the fact. But we'll have to see. We're back over the 200 weekly. You have to understand these higher time frames is 200 weekly. It needs to end of the market needs to end above here by Friday close. So if we get rejected hard here and we find ourselves back down here on Friday, that could be concerning, as this could be the one leg that finally breaks this 36 and we go sailing down below. Again, that would lead up, have us essentially right here for the core and for the start of the earnings, which would be interesting, because if the core is bad, you'll see a break, and then you'll get whatever the earnings leave us, and potentially down here could be it. Or maybe we get some break in inflation, and then we could get a break up and potentially start running up here. Again, but even a recovery mode is going to be very slow, and it's going to be still very choppy. There's not going to be any straight shot up unless we get some really actual positive, perhaps earnings, or we get some real positive inflation that shows a dramatic drawback in inflation, which again is not something that's going to happen overnight. We still need a couple months in between there. For that stuff to set in, to really see how much of an impact it has. Again, the Fed's going to overshoot it to hopefully capsize it and make it draw back, so that they can not raise rates, and see how the market handles that. And then again, if it handles it well, then they'll consider bringing it down. But they're not going to just pull it. They're going to let it sit right there just to make sure. Something the Fed has also said. So just be mindful of that. Just because there may be a slight drawdown in inflation, or the inflation seems stable, they're not going to just automatically start drawing down rates. That's not going to happen. They're going to sit on it and wait until inflation comes down. Say if they sit on it for 2 months, and then on the third report, it starts pushing again, or they sit for 2 months and they essentially take 25 points off, and then essentially the inflation shoots up again back to all-time highs. That's what's concerning. There's no way of truly knowing, so you have to essentially tinker with inflation to see if that's what it is or not. So again, the Fed isn't worried about the world. They're worried about battling inflation, our inflation. They've made that clear as day, but it's not going to stop the market from running off a hopium. So just realize that this pump is very artificially inflated in hopes that things get better. When we've corrected twice, when people things were getting better, and absolutely got obliterated falling into this. It's not saying you can't take advantage of these runs, but you need to be taking profits along the way. So we'll see how this week plays out. But this ultimately, this 37.27 is critical on the weekly, and see if we end back down here by Friday. If we do, that's concerning. That's just setting us up for a bigger lower low, in my opinion. Otherwise, if we could stay above it, could potentially get a nice run up here till core, and then we get our correction back down. So and then maybe we hold here, and then that would be a more of a sign, from, in my opinion, that maybe this was bottom. It's really hard to tell. You need time, but it's better to get confirmation in this market than to assume every low that we hit is the bottom. And people have been corrected about that multiple times already this year. So with that being said, that's what I'm looking at SPX. So I want to see essentially this 37.93 needs to break up for more upside. If we break below the 3700, my opinion, that's just setting us up for more to the downside moving into next week, which is very a pivotal week. Bitcoin, again, no point really talking about this. It's going to follow the market sentiment, so it's again holding just like the market is. Tesla, this is another interesting scenario. Is Elon came out and said he's going to buy Twitter. Now, there's a lot of things that have to come into account here, right? Elon's going to be able to still get a loan for that. He did add that in there, and I thought that was very slick, because if he was originally planning to just pull the money out to get it out of the market because he knew the market was going down, and then backed off the Twitter thing and is now bringing it back to the forefront, it's probably because the rates are so extremely high that he wouldn't qualify for a loan, because part of it, I believe, is based off a loan. And if that's the case, it could falter that way and then look like it's not his fault. But better yet, the fact of the current environment in which we're in with the high rates right now, because right now it doesn't matter how much you make. The rates are just so extremely high. It's absolutely absurd to get approved for anything. And also considering that the dollar is so high. So with all that being said, maybe it's just a conspiracy theory. I don't know. But in my opinion, I think he pulled that money out to save some capital as the market was going down, and then use Twitter as an excuse. But now he can pretend to try to buy based off of the intention that he can get the loan, understanding that the loans are so high that it's hard to even get approval. It doesn't matter if you're Elon Musk. It's still Elon Musk isn't asking for $25,000 here. He's asking for billions of dollars. So it's again not easy going. It's not going to be easy for him to get approved. It doesn't matter who you are. So being said, Tesla, interesting spot. So we got that Twitter stuff. So now that was potentially adding to the downside. We have to see how this thing opens tomorrow. If it does, it could break. I'm looking for the 220. And again, if that does break, you do have that support around that, roughly around the 200 monthly. So kind of watching that as well. But we have to see if this causes any more downside selling, perhaps selling more shares to compensate to try to buy. I think Tesla already has that all mapped out, or Elon already has that all mapped out. So again, something to keep on watch. I'm waiting for this Twitter thing to kind of play out. And then you got earnings right on top of it, just right around the corner on the 19th. So with that being said, BA, again, like the market, you got a nice bounce, looking to retest underneath here at the 135 for rejection, and then see where we go from that point. Again, it isn't the first real rejection, but this, I would call this a true retest, is that you get a big enough break and then you get a retest, and that one's normally you get rejected pretty hard. And then from that point, you try to attempt to break it. And if it doesn't break, it just roll over and dies. So majority of the time. So that's what we're looking for there. JPM, again, same thing, retesting. This could be, again, everything is at support or at resistance right now. So again, I wouldn't be surprised if this turns back over, fills the gap. We'll find ourselves right back here by the end of the week, going into core. Again, core, if core does well, then the resistance and support really won't matter. I think the market will just rally through the roof at that point if that does happen. Again, you're seeing some relief bounces in the banks. This is a big driver of what's been going on, but understand you are coming right into resistance. So tomorrow's open and tomorrow's close will be extremely important on to see the direction in which we're going to go. So that being said, that's really all I'm going to put out there for today. Again, because right now it's just right now we're running off of hopium. So there's no real reason why we're pushing. We are in kind of an earnings mode at this point. to try to run, but it really depends, because all you need is one news article and it just changes everything. And we still have to hope that European economy can essentially survive the night. Even though they did come out and say that they have enough gas to make it through a mild winter, and the way things have been going. I don't think that's enough. So I think they're just trying to ease everything and pump the market, as we were on the verge of Europe was on the verge of financial collapse just last week, and so they're barely skating by the skin of their teeth. You have to also realize that one of the biggest banks in the world almost went bankrupt as well, and then almost got crushed as well Saturday. And now all of a sudden we're back in the bull market. So understand what's actually going on here is that we're playing with fire, and way too close at this point. That one, you wake up in the morning and the thing could just limit down. So just be mindful of that. And this is the kind of market you're dealing with, is that there's some really big financial system issues that are going on right now. And I'm not talking about a little thing that's just going to go away. These are some big issues that we wake up and something could be absolutely crushed in the morning. And then, we dive another 200 points at open because something happened or one of these black swans occurred. So even with all that being said, I try to remain neutral. I am a perma bull, but again, what's going on right now is very different. It's not something that is normally seen. It's not like something you've seen 2 years ago. It's something that hasn't gone on for most of our lifetimes, right? Is dealing with a recession at this scale and what's actually going on. So being said, if you made this far, go ahead and drop a like button. Till next time, I'll see you guys later.